So when you show this dividend stock model to clients, that you manage, what is their reaction when they see names like Apple or Verizon or some of these names you've already mentioned?
Well, back when I first started doing this, I did have a few clients come to me and say, "Hey, I'd really like to own XYZ company," and they would throw out the name of a company. And typically, if I looked in their portfolio and I looked at a mutual fund they owned, I could find that they owned that stock. So regardless of what stock they would mention, I could probably find that they did own it inside a fund, but they didn't know that. And so what would happen is the market would go down significantly. Their account value would go down significantly. And they would look at their accounts and they would say, well, I own XYZ mutual fund and it's down 20%. Should we sell that fund? Because it's probably not a good fund, right? It's gone down 20%. But what I found is when they own these dividend stocks and say it's a McDonald's or a Starbucks or, like you said, Verizon or AT&T or Apple or Microsoft, even if they're down 20%, they know those companies. And so they may go past a Starbucks on a day when the stock market is down 2,000 points, and that Starbucks has 20 cars in the drive-thru. So even though the stock market is down and maybe overall the market's down, if they own the quality stocks where they know what these companies do, they may not know everything about the company, they may not tear apart the balance sheet and the income statement, but they just know they're great companies and they know that they've been through many different periods of time where the economy has been weak and they've been able to persevere and do well. So I think it just makes people feel a little bit more secure and it makes them take more of a long-term approach, to be honest.
That's great. Yeah, it reminds me of a video I did with Visionary's Chief Investment Officer, John Fisher, and talking about just the frequency of looking at your accounts and your statements and so on, that the research had shown that the more frequently you look at your accounts, the more conservative you tend to make your account because, losses tend to hurt more than the win.